Hello everyone, Jared here, Crypto Plan. That's right, this video is all about 3 ways to help you improve your investing. Now, some of you may be a way better investor than me, but some of you may not. So this is a little bit of tips and tricks that I've learned in the short time that I've been heavily into investing. And I tell you, I've been heavily into investing. I've been putting hours in every day, learning about fundamentals, learn about technicals so that I can really become a better investor. And the number 4, which we haven't put on this list, is made mistakes, because I've already done a video about that, and making mistakes is probably the best way to learn. And these 3 things are what I've learned from making the mistakes along the way. So just a little brief of what we're going to do. We're going to turn up the volume and turn down the noise. We're going to have a plan, and finally we're going to define and refine our strategy. So before we get into it, and before we hammer into these key points and show you how to become a better investor, I would love it if you could smash that like button and click the notification bell and click that subscribe button so that I know that you like the video, and so that YouTube knows that you like the video, and we can share it with much more people, and many more people can improve their investing. Now, we're going to go to this little slide here. Turn up the volume but turn down the noise. What we need to get out of this, and I'm a soundy and an audio person, lighting person, worked in concerts and events for years. So the gain on the microphone is going to be turned right up. So it's going to be picking up everything. And that is that you're going to be listening to lots of news and news that's related to investing and the world in general, because you're trying to listen for the signals to connect those dots and the macro trends. So what we're talking about here is, like, we're in a pandemic, EV vehicles are, starting to take over. Maybe Biden might be a little bit more green, so there might be some more things going on there if you had read those signals. What other things we got going on? There might be a copper shortage in the future. Rare earth metals might be a little bit short in the future because of these electric vehicle demand, and the fact that the world is moving from a second world to a first world rapidly. So we've got countries like India rapidly moving into the first world or into the middle class. And this idea that if 1 billion people bought one white good, that the copper would be just in such a higher demand. So there's many macro trends that we can be looking at there. Another one's aging population. So, I'm hearing about aged care facilities being in high demand in the future. So maybe real estate investment trusts that are solely focused on aged care facilities or healthcare might be the kind of play that you want to roll into. So there's these macro dots that we need to connect, right? But while that's happening and while we're getting all that information, we've got to filter out that noise of the fear, doubt, and uncertainty. So the fear, doubt, and uncertainty of those people and those naysayers, and the people that are bearish because they have an incentive to push a stock down or to push a commodity down. And that's fine. They've got their own agenda. But if you're a buy and hold or a short term or a swing trader, you've got to block that out, because that's going to cause you to make emotional, irrational decisions. So turn the gain up, but filter out the noise. You've got to figure out how you do that for yourself. What that means for you is different for everyone, but for me it is, definitely absorbing a lot of emails, absorbing a lot of notifications, but just being able to scan through them and go, well, I'm not going to get into something if it doesn't serve a purpose for me, if it doesn't really help me out. Now I am going to go into an example of NEO, and this is one of the mistakes that I detailed in my earlier video, and why, if I had have used this strategy, that first step of honing in on the macro trend and filtering out the noise, I would have made so much money off this stock, and maybe doubled down on my position and made even more money than what I could have. So at $5.50, when I first got the hot tip, or somebody told me, hey, buy this NEO company, they're into EV, they're the next Tesla or whatever it is, I bought it at $5.50. Now, what I should have done there is gone heavy into researching and turned up the gain on NEO, or turned up the gain on the EV market, but I didn't do that. I was young, dumb, and new to investing. Not young as in age, but young as in it was my first share that I'd bought on this particular app that I was using, and I thought, great, I bought this share at 550, and I bought another one that was a hot tip. The other one pumped up 100% today, and I didn't realize at the time that when a stock pumps 100%, you should probably sell it. Because it's probably a broken stock that eventually is going to disappear, right? And that was, I think, Denbury Resources, and it's like an oil company, and it was pretty much nearly bankrupt. But anyway, what did I do? I bought at 550, bought 45 shares at 550, and I thought, whoop-de-doo, I am the biggest, swing trader in the world, and I'm going to sell these things at 670, and I'm going to double down on that other Denbury Resources company that's definitely going to pop another 100% again the next day, because, why not? I know everything about nothing. And it didn't, and so I sold out of my position, and I made the biggest mistake ever, because if we zoom out and we look at the price today, it's around 50 US dollars, and it's probably going to sit there for a while before it retraces. But potentially, if I had have just seen how strong of a growth pattern the EV market in general, and probably NEO, was going to have, I should have just bought and held and turned down all the other noise, which I did hear at the time after here, where I was like, around this region where, other people were like, oh, I like all these other EVs, but I don't like NEO, and I don't really believe in NEO. And then eventually this is when the masses came in, and then eventually everyone's probably talking about NEO, and that's when you sell out, when the taxi driver's saying, yeah, have you heard about this company NEO, right? So anyway, I didn't turn up the gain and filter out the noise in the early days, and that was the result of it. So I just wanted to kind of show you my first mistake, and the thing that drives me to really kind of be invested and double down. I think I did the complete opposite with XRP. I think I bought XRP at 30 US cents, and then it went down, and I bought more. It went down, I bought more, down, more, bought more, all the way through 22, all the way through back up through 25 cents. And what has just happened? And if we just go over to that chart, XRP, because that was the crazy time. So I bought in around here, I bought in around here again, bought in around here, bought around here, bought here, bought here, bought here, because the whole time I was doubling down on my information. I had the gain turned up. I sought the information that I wanted and needed to continue to be bullish on the accumulation. And, all through here, I wanted it to pump, but it didn't. But I'm glad it didn't, because I got time to accumulate, and look what's happened. It's just shot up on out of there, which was the prediction, which was what the bulls were saying, which was what the charts were pointing to, which was what, the whole market was pointing to. The same as the EV market, it's pointing to high growth, high great opportunities pretty much anywhere. If you put money in any EV play or any crypto play at the moment, you're probably going to make some money, right? How much money you make depends on how early you got in, right? So NEO was my mistake, XRP was my success, right? Let's go back to our little notes here. Have a plan. Number 2, have a plan. I think this is one thing that really came to me reading the Rich Dad books recently. I read all 3 Rich Dad books in the series. He said that sometimes he does conferences, whatever, people come over and go, I've got this money, I want you to tell me how to invest it. And he'll ask, like, why are you investing? What's your plan? And they don't want to answer, like, you just tell me a stock. You tell me a stock and you tell me what to invest in. You need to know why you are investing. Is it for the short term? Do you just want to double some money in a year? Is it for the long term? You're trying to build wealth for the long term? Is it for income? Are you looking to scale out of working for a living and get an income flow through dividends or something like that? Is it a hobby? Is it something you just do on the side because, it's more interesting than gambling on sports? Is it to raise capital? Is it to raise capital? Is it to kind of turn 10 grand into 100 grand to start a business, or buy a machine to go out and mow lawns or something like that? So have a plan and understand why you're investing in something and what you want to do at the end. So the next thing you need to do in your plan is to have an exit. So For me, with the Neo example, buying in at 550, I exited because I didn't have a plan. I didn't think, okay, well, I bought this at 550 and I want to sell it at 20. I'm going to wait till it goes up to 20, and that's my good gains for what I'd invested. Are you going to exit all at once or scale out? Are you going to sell a bit on the way up? Maybe my plan might have been sell half at 20 and then hold the rest until a year and scale out the rest then, or sell half at 20, sell a quarter at 30, and then the other quarter at 40. I could have done it that way. But then, that plan might change along the way because you learn more about a stock and you might double down on your investment anyway. And then you've got to understand with this plan is what is your next move? Is it into another investment? Is it into a business? Is it to pay down debt? For me, I'm quite public about my investments not to pay down debt, but I would ideally like to pay down any property I own or any debts I have that aren't doing anything for me, or get any properties that I'm invested in into a positive cash flow scenario. But other than that, it is to buy businesses or to buy into the capital needed to start businesses. So that's what my reasoning is there. So I have a plan. So now when I look at all my investments and every day and it feels like it's taking forever, I just know where I'm going to exit. I've got my targets. I listen to other people that also have similar exit strategies, and I vibe off that, and I have my mojo. I know where I'm going with these things, and I know what I want out of it. I'm not getting itchy feet and going, I need to get some profit out now. There'll become a time where I'll probably go, well, if I took profits to cover my initial investment right now, then maybe I can sleep a little bit better at night. But I tell you, I don't sleep poorly at night because I'm invested in my investments because I believe they will go up. And I am firmly a believer of that. Number 3, we need to define and refine our strategies. Are you a swing trader, day trader, long, short, options, or a combination of a few? Now, this is so important because, especially if you are listening to YouTubers, you need to understand what sort of trader they are, because if they're a day trader, the information they give you is going to be kind of irrelevant to you as a swing trader or a long-term trader, because they're looking for smaller, shorter time frames on their charts, or they're looking for, catalysts that pump a stock in a day or two, and so they can get in and out, right? So whereas with a swing trader, you might be going, well, look at the EV market, for example, like what Hyliion's done or what Workhorse Motors have done, or Lordstown Motors have done, all of them, even some of the kind of charging plays, they've gone up and down and up and down, so if you wanted 100 shares in those stocks, you could have bought the 100 shares, rode them up, sold them, rode them down, bought in again, rode them up again, sold them, rode them down again, bought them, and then just ride the rest of the wave. Have taken a fair bit of profits, covered your tax or your expenses, taken a bit of profit, and then you're on your way to the moon or to wherever they're going to go in the future once the volatility is shaken out of that market. You could just be a long trader, just straight up long. You want to buy low and sell high in a long time away. Like that could be 5 years or 10 years. Options, you might be looking for income by buying calls and puts and selling the contracts on and all that sort of thing. Or you might be a combination of a few. Me personally, I'm a long trader and a swing trader. I've figured that out. I'm not a day trader. I don't really want to short. I think if I do short trade, it'll be a clear opportunity where I see it every now and again, and it's a chance thing, and especially in the bear market, I think it's something I want to learn. But right now, I'm essentially a long trader. It's a buy, hold, and sell when the price has gone much higher, and I'm a swing trader. So I'm looking for those opportunities in the future where I have a little bit of capital to swing trade my portfolio a little bit. And when I see those patterns of up and down movements within a range going on, I think they're great opportunities to swing trade and make some income for yourself, along the way. Identify the key markets you want to invest in. Now, this is, like for me, crypto, I'm looking heavily right now into metals, especially rare metals, gold, silver. Copper's not so rare, but it's in a higher demand compared to supply. And then rare earth metals as well. Same deal. They're not rare as in they're everywhere. They're just harder to produce and manufacture. They're capital heavy. So trying to find the right plays in those markets for when the squeeze is on for demand and there's not much product out there and the price skyrockets up, naturally these stocks are going to skyrocket up because everyone's going to flood into them. Other markets, EV, I'm kind of out of that at the moment because I think everything's so overvalued and it's very risky. Whatever gains you get, you could lose in a month because the stock market decides to pull all of its money out. But yeah, they're definitely there. And then, definitely got my eyes on value and growth and, like these kind of long-term companies like Royal Dutch Shell that are just so beaten down right now that buying in for the long term is probably a good thing and reaping the benefits of those dividends. Managing your emotions is so important as well. And I think this is something I've had to kick out of myself because the stock market doesn't love you. Like you can love the brand, you can love a product. I love Skechers. I owned Skechers for a while. I just sold out of my position because I'm like, that 600 euro that I had in Skechers could do so much more in these other markets that are going to go parabolic right now. And just because I loved the brand and believed in it and believe that in 5 or 10 years it'll go up in price, that I should hold that stock, well, why not buy it later? Why not buy it in a year's time? It might have another correction. There may be another opportunity to get into that stock. It will still be a good, valuable brand. It still will go up in price. I may not get as much out of the end gain as I would have if I had have held that stock then. But because I threw away the love for the brand in my stock ownership, it's given me now the ability to invest that in something that has a higher volatility but a higher opportunity or a higher percentage gain. So do not become attached to the stock. Become attached to the brand and the products. Love the products, but when you're investing in the stock or the company, get attached to the technicals and the fundamentals of that company. They need to be making money, and the market needs to want to buy them continually and continually and continually. And finally, to manage your emotions, just find your escape. Journal your feelings. Learn some meditation. Go get out into the great outdoors. For me, it's surfing. I love going out there into the ocean and catching waves and letting the salt water wash me around and kind of forget about everything for a while. Playing with the young girls, playing with the family, doing things like that. Like little bits of escape, because if you're heavily invested in the markets, the stock markets, the crypto markets, and you're serious about it and you're educating yourself, it does consume you and you do get into it and you want to be checking the prices all the time. So you need to be able to tap out. So yeah, that's pretty much it. I hope this helps everyone. Please like and subscribe if it does, to share with the rest of YouTube. But just recapping, turn up the volume, but turn down the noise. Really get the microphone out there and be pointing it everywhere and getting as much information as you can, but not the information that's really going to distract you or make you feel fearful, doubtful, and uncertain about something that you could be certain about if you look for the right information. Have that plan. Why are you investing? When are you going to exit each investment? And what is your next move with that investment? And 3, define and refine your strategy. Which type of trader you are, which type of investor you are. What markets are you most into and want to follow and interested in following? Have an understanding of fundamentals and technicals. So important. Just knowing the balance sheet of a company is not enough. Knowing that you've bought it undervalued is not enough. You need to look at the technicals. Is it going down while it's undervalued? Or is it on its way up while it's undervalued, because that's going to help with your emotional thing. If you can buy something that's undervalued while it's on the way up, you're going to be in the green forever, right? So technicals are so important to match with those fundamentals. And yeah, that's it for today. 3 ways to improve your investing. And I'm just going to, for those that have stuck around, going to close down and just do a little bit of a market recap, because there is some cool and great things going on over here in the crypto markets. Just a little bit of an update. Gold is really reaching down, so I think that could potentially be the bottom for gold. So we could see some of our gold stocks and on the way back up. Silver as well, I think it's reaching down again. It's going to go up. It's on the way up. It may kind of retest one more time on the 1, 2, 3, 4 bounce theory that I have. The total crypto market is just so strong. Bitcoin is so close. Oh, it's so close to pushing 20,000, which has made Riot smash some resistances. It's pretty much out of there. It's like into moon territory. Marathon Patent Group the same. It's smashing resistances. Probably got a little bit more resistance in Marathon than Riot. But yeah, this is so bullish. Argo blockchain is just steadily on that upward channel, which is just beautiful. Ethereum bullish, XRP bullish, Stellar bullish, Cardano bullish, VeChain bullish, Link still in that channel but strongly bullish. BAT probably lagging a little bit. There's still some opportunity there. Dash, I just found this one. Now, you may know about Dash. It just never stood out to me, but it still has about a 1,400% potential. 1,400% potential from the price here to the all-time highs. So that's a good one to keep an eye out for. So right now, it's probably the best value or the most undervalued of the top 20 coins out there on Coinspot or Coinbase. And Litecoin is also very bullish. Zilkila bullish as well, but not as bullish. It's kind of a lower market cap coin. So this is one of those ones that'll pop. It'll pop big. You'll probably have 100% days, 200% days, because it's such a low market cap. So yeah, that's the good thing. And I did just do an experiment today. I bought this company, Fuel Cell Energy, and I bought it for about an average of 10.20. It was my first attempt at possibly trying to day trade something, just because there was some real serious price action that's been going on the last few days. And if I go back and use this new strategy that I've been discovering and putting it on a 2-week chart, there's this red cloud of resistance, right? And there's been this solid price action. Now, if this stock can break through this red cloud and turn that into resistance, and because it has broken through this volume kind of peak here, or this volume level here, that where sellers were coming in pretty heavy, it's broken well through that. There's not much of that selling resistance in the future. If it can push past there in the next few days, this stock can go wild. If you have a look at the history here, and this is a new emerging technology, right? There was a point in time that this stock was very expensive, and it could be very expensive in the future. So there is so much upside on this stock once it clears this $22 mark. So if it can push through, clear this $22 mark, and then just keep on going, we are in for a real run on that stock. Now, this, like I say, it's a bit of an experiment. I only bought 8 shares. I just had a little bit left over in my investing account. So I only bought 8 shares, but hey, let's see what happens. So I'm looking forward to following this, and I might do a video on its own on Fuel Cell there, because they are, they're a hydrogen fuel cell technology. They're doing generators, and it's kind of green tech. So it's very, very good. And I think the Biden presidency is helping that stock, which is super cool. And yeah, for those of you that have bought MicroStrategy because of their Bitcoin purchases, well, you have been heavily rewarded in the last 2 weeks, because there has been a 50% gain in that stock, that's one I held for a while along with Square, and but it just didn't suit me at the time. I wasn't bullish enough, and I wasn't armed enough with enough information, so probably should have held. But anyway, I'm out of that, and I've got my beautiful plays in Riot and Marathon Patent and Argo Blockchain. So anyway, I'm going to leave it there. Please do like, please do subscribe, and that's it for now. Peace out. This is J-Rod from Crypto Plan.